3 days in a row we're up and sitting right here at the highs of the day. Take a look at the sectors. It's a momentum day once again here. So you've got tech leading, consumer discretionary, industrials, and there you've got the retailers week. And largely that's a problem that we've got with Tiffany. Speaking of momentum, the software stocks are moving to the upside. Most of the big tech momentum names, I think there's a little bit of a sigh of relief on the Salesforce numbers did well. There's ServiceNow up 3%. Broad semi names like NVIDIA are up. And of course, Microsoft now, the biggest company in the world by market cap once again. If you take a look at the apparel names, not a lot moving. Now, Burlington had great numbers. Their comp store numbers were better than expected. They raised their full year earnings. They raised the comp guidance. And the other discounters, I include TJX and Ross stores in that group, are also fractioning up. But if you look at the rest of the apparel group, Gap, everybody else, not really doing much on that name. So let's just say very specific to a small part of the retail world, Burlington's generally very good numbers. Jewelry makers, well, there's what's left of them, where you have Signet and Tiffany, all down on the Tiffany numbers overall. This is a very good story to look at about whether there is some slowing global growth. The discretionary spending might be slowing. The comp store sales were disappointing, and the comp guidance is disappointing. So if you look, the Americas, they were up 5%, as I recall. I think 6% was the consensus for Tiffany. Europe was flat. We were expecting up 4%. That's a big disappointment. Asia was in line, but there was a lot of comments about lower spending by Chinese tourists and the U.S. and Hong Kong. You heard David bringing that up. So here you have the strong dollar, I think, impacting some things. A little bit maybe of a wealth effect on discretionary spending slowing down. That might fit in with the slightly slower global growth story that we've been seeing. Speaking of slower global growth, you put the strong dollar together, slower global growth, and tariffs, and you get a lot of pressure on these material stocks. We don't cover them every day because the market caps are fairly small. But quarter to date, you look at some of these big names, CF Industries, Freeport, Dow DuPont, Nucor. There you got all of them hit by those three concerns: the tariffs, the global growth, the stronger dollar. Keep an eye on that. They're flat to slightly up today, but the trend is clearly down. As for the speech today by Chairman Powell, boy, have I got bulls all over the place just trying to convince me you don't understand he's going to change his stance. I don't understand why the Fed chairman would suddenly change his stance ahead of an FOMC meeting. That would be a little bit unprecedented. He has been consistently talking about the U.S. economy being solid. Inflation is getting closer to the Fed target. He's been saying this for months on end, and yet the whole market's primed for a rally. I keep hearing, Bob, you don't get it. It's not going to be that way. It's going to be very nuanced. He's going to emphasize suddenly a little bit more slower global growth. There's going to be a comma in there about financial volatility somewhere. There's going to be, who knows, Bob, they could mention credit spreads tightening, widening out a little bit, excuse me. And that's going to be what we need, Bob. That's going to be the nuance, the dovish signal that we're going to need to get a rally in the market. Maybe. All I can tell you is everybody's expecting some kind of rally out of Powell today. We'll keep an eye on that. I personally, I'm old-fashioned. I'd like to see a couple quarters of slower ISM services growth, couple of months of unemployment numbers really disappointing. That would certainly get their attention. We'll see if the nuances rally the market.